What's going on, everybody? Liam O'Reilly, Vermont Economic Realtor. Hope you're doing well. Wanted to talk today about what's going on in the overall housing market. It's the spring market, right? Listings are up. Things should be going well. What is going on nationally? Certainly here in Vermont, listings are up from where they were, but they're still down year over year, and it looks like that's what's going on nationally. So let's see. Look at this story out of Redfin. Get my face out of the way there. Housing market update. Spring home buying season kicks off with steady demand, but lack of listings hold back sales. And, this is really something that I've talked about extensively on this channel. It's kind of, getting to the point where we're beating a dead horse, but there's so much demand for homes right now, both for rent and to buy nationally. And I think the real issue is the supply side of the equation. We need more listings in most markets across the country. Now they have a Redfin agent that they interviewed in this article here from San Jose, which I believe is one of the markets that was declining. I'll have to go back and double check that. But here we go. There are plenty of serious buyers out there, but there's not enough inventory. And this is something that we've talked about a lot on this channel, right? If there's a lot of people out there who want to purchase homes, and affordability has gone way down, so there's less bidding wars. Homes aren't getting bid up as much, and we're not seeing price increases like we were, but there's still enough buyers to satisfy the demand for the homes out there, the homes on the market. There's still enough demand to satisfy the supply that's out there, and demand still outweighs supply, and that's really what we're seeing across the market. This agent goes on to say anything that comes in the market at a decent price in a desirable location is getting multiple offers. The best strategy right now is to be aware of every home that's coming on the market and be the first to see it. So this is very similar to what we've seen over the past few years with, multiple offers. Get in there, be one of the first offers in, and try to, pay the best price. The difference is, as they say down here, for the week ending on March 23rd, 30-year fixed rates dropped to 6.42 on average. So way above the 3% rates, the sub 3% rates that we saw in 2020 and 2022. There's still bidding wars going on even despite the rate hike. So let's take a look at some of the graphs here from Redfin just to get an overview of what's going on. Median sales price down minus 1.7% year over year. And we've talked about this in other videos. Nationally, it's down 1.7%, but it really varies market to market. There's some markets that are down like 10% year over year. There's other markets that are up 10% year over year. So it's really market dependent when it comes to the median sales price. Median asking price is up. Now, something that I really wanted to focus on here, pending sales way down. And this has to do with the lack of supply, right? So, it's just, wow. I didn't really, I saw this and I prepared before the video, but I didn't realize how far below the previous years pending sales were. So basically in 2020 and 2021, there was a ton of demand, but the supply was there to keep sales relatively steady from what they have been in seasonally speaking in 2021 and 2020 in 2022. So 2022 was probably the hottest market that we've seen in recent history, but there was enough new supply coming to the market to keep the number of sales up nationally. Now, when you look at what's going on today, there's, home pending sales are down almost 20%, which is just crazy. And I think this is where this is the main culprit. New listings of homes down 22%. There's just not enough people buying and selling their homes. Look at how consistent new listings were coming to the market in 2022 and 2021. As people knew that they could get top dollar for their home and interest rates were still low, they were selling and buying somewhere else, or maybe selling and renting for a little bit. But now that rates are up, we don't have that move up buyer anymore, and people just really aren't selling. Plus, with rates higher, the market is still competitive, and that's something that we've seen in the stats that we're looking at, but it's not the same as it was in 2022. 2022, it felt like every home had 10 offers, where if there's multiple offer situations this year, it's usually 3 to 5 offers. It's pretty rare that a home gets 10 plus offers. active listings up 15% to 2021 levels. So last year, everything was hitting the market. It was selling quick, but there was a lot of new listings. This year, homes are sitting for longer, but there's less homes hitting the market. And something to note is that active homes for sale are trending down still. And this really has to do with the lack of new listings because, when I think there's a lot of buyers out there who have been preparing for this spring market, preparing for a lot of homes to hit the market. I know a lot of people that I talk to, I've been saying for weeks now that more inventory is coming. There's going to be more homes. Don't worry, there's going to be more opportunities. But as the weeks go by with the buyers that I work with, the listings are down significantly year over year, and there's just less options than there were. And so I think what's going on is a lot of these, nationally speaking, because of the last lack of listings, homes are, they're sitting on the market for longer, but that inventory, those homes that are sitting on the market are starting to be depleted as buyers come to the realization that maybe, listings aren't going to pick up as much as they thought in the past. Um, month of supply is still relatively low, up year over year. Pending sales pending sales are, 46% of pending sales under contract within 2 weeks, down a little bit year over year, but I mean, not that crazy. Still hot historically speaking. Days on market is up to 43 days, but still below 2020 levels, obviously well above 2022 and 2021 levels. But like I said, that the active listings are starting to drop. So something else that I wanted to talk about in this video here, kind of changing topics, is talking about the spread between mortgage rates and the 10-year treasury. So, historically speaking, I have this Forbes article, but I just wanted to look at what rates are doing today. So the 10-year treasury is at 3.5%, and mortgage rates are sitting at right around 6% for the best mortgage rate you can get, which is 2.5% higher than the 10-year treasury, where on average the spread, as it says here, usually ranges between 1.5% and 2%. So right now the spread between the 10-year treasury and the 30-year fixed rate conventional loan is higher than it used to be, right? Mortgage rates are higher than they were relative to bonds. And the reason why you compare the two is because it's the same investor that's purchasing this product on the back end. The same people buying mortgage-backed securities are often considering buying treasuries, or that's one of the other options that they're looking at. So really, what's going on there? And I'm going to leave this article in the description. It's a little tough to walk through on video, but what's going on there, in my opinion, is, and this person's opinion, which really is kind of where I agree with Bill Connerly, the author, is that investors are kind of in a lose-lose situation when it comes to mortgage-backed securities, right? If they buy a bond and rates drop, then the price of that bond rises, so they can get a better return. If they buy a bond and rates go up, then they can just hold that bond to maturity. They don't have to sell it for a loss. But mortgage-backed securities, if rates drop, then people are going to refinance out of the loan that they have, and they're going to move into a cheaper product. So the investor isn't going to get all the payments that they'd like to get on their mortgage-backed security. On the other hand, if rates rise, then they might as well just wait and get a better return on their investment. So I think investors in mortgage-backed securities are kind of frozen right now, and that's what this article says as well, and I completely agree. And that's what's causing rates, the spread between the 10-year treasury and the 30-year fixed rate to be where it's at today, at 2.5%, where really it should be in that 1.5% to 2% range. So it's really, mortgage rates should be floating around 5% if things were more stable in the economy and with what people's expectations are for rates moving into the future. Anyway, I hope you folks got something out of this video. Not a whole lot of news compared to last week with in the past few weeks with the bank failures and things like that. It feels like there's kind of a pause going on in the economy. We'll see what happens in the future. I kind of think we're kind of in a little adjustment period, and more things could start to break. We could see more, economic turmoil in the future. Of course, I'll talk about that and how it relates to the housing market as things change. But this is what's going on today. Leave me a comment. Let me know what you think. I always love hearing from you folks. If you're looking to buy or sell a home here in Vermont, all my contact information is in the description. Feel free to reach out to me directly. I'd be happy to help you, or happy to find an agent in the area that you're looking for. If you're not looking in Vermont, or if you're looking outside of my area, happy to find you a great agent who knows what they're doing. So anyway, enjoy the rest of your day, and I'll see you in the next video.